Going to have a go at what they might do on Melbourne Cup Day, or your views about the inflation figures this week?
I think the inflation, I agree with the other panellists. The inflation figures to me aren't a surprise. I've been more surprised that they've been so tepid over the past year. That said, any sort of figure that's calculated in such a manner, there's always room for error. And the ABS do a good job given the task at hand. In terms of the RBA, I hate to predict what they'll do, but as I've been saying all year, I think that they've been far too aggressive in cutting. And that view obviously contradicts what many people on this show and what this channel say. But too quickly people forget
they've been too aggressive in what?
In cutting rates.
Okay.
There's more people who suffer from lower rates and higher rates. There's only 33% of the population have mortgages. Certainly there's retailers who benefit and heavily indebted businesses.
Yes,
but
I mean, obviously...
If you're a pensioner or a saver and watching this program and you're seeing your rates drop, that'd be a disaster, because that's your income, that's your livelihood. If you're living off your superannuation, the last thing you want to see is a fall in interest rates.
Yeah, but it is, Adam, because obviously, and Michael, I'd like your view on this. I mean, obviously, depositors do want rates high. Interested in hearing your view. You always have a fairly controversial view about the banks, but particularly Macquarie Group. I mean, they kind of missed the market expectations, but then their share price did well. What's happening there?
I don't know about controversial. I think my view is quite realistic, Helen. But
of course,
the problem with Macquarie, as has been for probably the last 2 or 3 years since the complete destruction of the Macquarie model, is their return on equity has been destroyed, and the value of a business going forward is what return it can generate on its capital employed. And Macquarie's down around the 5, 6, 7% mark. When it previously was a sort of 18, 20+% mark. So if you look at the value of the Macquarie business and franchise, compared now to sort of 2007, 2008, when it was spinning off these satellites and creaming them for fees and making money hand over fist, it's a completely different business. And as such, it's valued completely differently. So,
but does that make any difference in a sense in this new world order? Sure, their old model isn't working, so they have to kind of restructure and rejig themselves. Does that mean there can't be value going forward? Oh, going forward. I hate using that term. Sorry, go ahead.
There's very few businesses that are able to reinvent themselves. And last time I was on the show, a few times ago on the show, is that Macquarie's not Madonna. They can't simply reinvent themselves. If you look at the top companies from 20, 30, 40 years ago, you see very few similarities. In the US, you've got maybe GE, who's been around for a long time, and perhaps like an Exxon, which was originally Standard Oil. But there's very few companies that are able to reinvent what they do years gone by. Same in Australia. If you look at the biggest companies in the early 80s, most of them aren't around now. There's obviously BHP and the banks, but the rest of them is completely different. And Macquarie's had a complete destruction to how it made its money. It used to make its money by these satellite businesses, and it obviously had a bunch of other businesses as well, which it still has. But the key generator of most of its profits was its infrastructure businesses, and it would buy these infrastructure assets and spin them off and make fees along the way and charge these huge management fees. And eventually the market wised up and said, we're not going to have a part of this anymore. And suddenly Macquarie's fees dried up, and it's not the same business.
All right.
So someone who was looking during the Alan Moss era, it's a completely different entity and structure. And poor old Nick Moss, who ironically was one of the fathers of that infrastructure model, has been running this completely different business with a completely different return on equity.
Yeah,
so it's
Nick Moore.
nowhere near going to perform. Yes. Nick Moore, I should say. Alan Moss, Nick Moore. So exactly. So would I look at Macquarie now? Absolutely not, because its return on equity is so low and so poor and not going anywhere.
Adam,
that's what the market seems to be doing.
Adam, what do you think about the whole discussion of Macquarie looking at its private wealth business? There was a discussion that they may be selling it. This Macquarie Securities business has been losing money hand over fist. What do you think is going to happen there?
Who knows? I think they can get a good price for it, and it's losing money. It probably makes sense to spin it off. But ultimately, it's the value
he's taken some costs out of it, hasn't he?
Ultimately, the value of a business is the value of its future cash flows. And if Macquarie can't generate good future cash flows from the wealth business, there's no need to have it. If somebody else can, it might as well sell it. So ultimately, the question is, can Macquarie get its return on equity up to what it was? Or will it continue being this low returns utility almost, which is effectively what it is now?
All right, Adam, just the bigger banks and their results. What do you think? What are you expecting briefly from NAB and Westpac?
The banks, for me, are a long-term train wreck waiting to happen. And as you know, my view is way dependent on the Australian property market, which I felt has long been overpriced. And you're looking at the bank books, and they've got hundreds of $billions of assets tied to residential mortgages on their book. So
yeah, but they keep making record profits. So I'm not quite sure how that view sort of reconciles with the record profits.
Victor's comments were very precipient on that point in relation to ANZ. I think he was referring to, they've made bigger profits, they've got a bigger capital base. So your raw profit figure is completely irrelevant. What's relevant is your earnings per share and, more importantly, return on equity. Yeah. So if you're a company and you're turning over 20 million, you take over a company that's turning over 20 million and borrow to do so or issue shares, you're not double as valuable as a company, you simply double the size. But what's relevant to investors is a return on equity and how you can grow that return on equity. That's the relevance here. And if you're a sceptic on the housing market, you think housing's overpriced, then you'd be very concerned about the banks. Forget the quarter-to-quarter results, because they'll be steady till we have a sharp change to the overall value of the assets they're holding on their loan books.
All right. I just think Adam's 100% right.
Your view about Fairfax and what happened at the AGM?
Just on the point that the guys are making, from my recollection is you can actually call an EGM with 5% of the votes anyway. So whilst the two strikes rule has its own problems and it's largely symbolic, I'm pretty confident Gina can call an EGM any time with her state.
Yeah, there's no problem with that, but I was saying that's a very aggressive move. Yep. This way, it's a lot softer, easier move.
Well, it also takes another year as well.
And it gives her more, if she wants to move, it gives her more negotiating power over the next 12 months, because she holds a gun to their head without actually calling an EGM. To call an EGM is tough work. You've got to be quite aggressive. And it's not easy. And you mightn't get the votes. That's the other thing. Right. You might not get the votes if you call it. So I just think it's another way, and a longer-term way, and a softer way of maybe getting a result.
All right, Adam, did you finish your point?
Yeah, that's good.
All right, no, that's right.
In terms of the the remuneration, you feel sorry for Roger Corbett and Harwood in a sense, because absolutely their remuneration compared to profit is extremely, and compared to market cap is very high. But we've got this interesting trait, and pretty much every country does, that remuneration is based largely on market capitalisation. So the bigger the company, the more people think we should pay the CEOs, and that's just generally how the accepted thought. But really, if you look at the difficulty of the job, Greg Harwood's got a far more difficult job and a far more risky job than Marius Kloppers or Tom Bernese or any number of other people. So
well, at the moment, but what about the chairman's fees? That's what we were really discussing, I suppose.
So I'd say Roger Corbett's got probably the most difficult chairman's job in Australia as well. And I think there's a fair point to make that he hasn't done a fantastic job of it. But could you argue who could do better? You've got Gina Rinehart, you've got this difficult environment, you've got print declining across the world. Fairfax haven't done a very good job in many senses. I'm not going to stand here and defend them, because I think that they've done a lot of things wrong. But remuneration-wise, I think there's far greater culprits on the ASX than Fairfax.
Yeah. All right, well, let's move on. Adam, what do you about the, you know, I mean, there was anger from shareholders at the founder of Billabong as well this week.
I wrote about that this week, Helen, and it's pretty rare that you'd see, and congratulations to Vaz on the ASA's move and the success they had in their push to vote out. Whilst it wasn't successful, there was, I think, a 33% or 32% against vote for Gordon Merchant. That's an extraordinarily high vote for a company founder. And it's very rare that people vote against founders, or nor should they, because in most cases the company founder is instrumental to that success and knows the business better than anyone else. But I think in Billabong's case, it's been such a bad performing stock, down 95% since its peak. You've had terrible CEOs in Matthew Perrin, who's now on fraud charges and unrelated to Billabong, and Derek O'Neill, who had a disastrous reign, and you see the share price up there. It's gone down from, I think, about $17 to 85 cents now. So it's been truly calamitous performance. Gordon Merchant obviously rejected $3.30, said he wouldn't take $4. This is 6 months ago. So I think if a founder was ever going to be voted off, I think now is time for Gordon and Colette, who's a long-term employee of Billabong. They've done a good job building it up, but I think they had their time, and 32% of shareholders in the ASA did a really good job with Vaz and Stephen in pushing that.
All right, Vaz, were you Your view on this very briefly, because we've only got a couple of minutes. There was talk about, it hasn't gone to tender, but it is interesting. Mr. Packer and former Liberal leader John Hewson has had a go about this. He's questioned the probity of the process, and he said it seemed to be, quote, the height of arrogance for Mr. Packer to suggest that if there had been a tender process, he would have won it. What's your view about that?
I don't know about arrogance. I think the Packer family has a good history of getting what they want, and James has played this absolutely superbly. And remember, he's got Mark Habib and Carl Patar working for him amongst a host of other pretty effective players back there. So, if you're a betting man, I'd be betting on James, not the Echo board, and I'd be betting on James to succeed, because I think he's played this one absolutely to perfection. I guess the longer term question is the gambling market a defensive sector? Didn't perform particularly well during the GFC, so James Packer did an unbelievably good job selling out of media at literally the perfect time. He's now loaded up on gambling in Macau and across Australia, and he's largely out of the US. But it does raise respect to gambling. Is perhaps mistakenly thought as being super defensive, but if you look at Sheldon Adelson's personal wealth falling from 40 billion to 2 billion in the States, and he's a big casino mogul over there, it's not always the best defensive play. So perhaps James might win the battle, lose the war, who knows.
All right.
But he's done